Welcome to TheoTrade. This is Don Kaufman. Here we are. It's September 27th, 2016. You are watching the Theo Night video. Tonight, we'll start the discussion looking at the S&P futures, and we're talking about levels. You know, a few weeks ago, I mentioned some really specific and prime levels that we were seeing tremendous amounts of hedging activity in the marketplace. Hopefully you guys kind of tuned in and turned on specifically for that. But those levels happen to be none other than, and I'll kind of recite them here, 2153. Then we take a look down to 2129. Down below over here, we've tested the 2112. And at the very bottom here, 2100 on the button, though I just put that one down there for fun. Really, three predominant levels, 2112, again, 2129, and 2153. Now, if you take a look at this, what we are viewing here, and I'll kind of highlight a few items, this happens to be a 30-day, 1-hour chart. So I wanted to show you some of the, again, hedging activity that's persisted, very specific to this 2153 level, which, again, we've hit a multitude of times and stopped on a dime. Now, if you want to take a look in a shorter time frame, how helpful this might be on trading, not only intraday, but trading positions overall, take a look over the last 24 hours. Now, here's just a 1 day, 1 minute. To give you maybe a little bit of a better view, I'll actually back out the time frame just a bit here. Let's go 2 days and, for instance, 10 minute. To see how much and how did this really hold the particular level. So here we are again from Friday's rally coming off, stopped literally at 2153, kind of again on the dime. We saw even in the evening hours there, big volume bursts. Again, hedging activity, even the evening hours, volume burst, which you can barely see any volume at all on the screen, but you see volume picking up in the middle of the night just because we're hitting 2153, then cresting to and through 2153. Again, this is the middle of the night. Heavy volume in the middle of the night. So again, there's huge hedging activity persisting at this 2153 level. How ironic, we stopped today and the market just closed, you know, within moments. Again, the S&P futures are still open, okay, for the next, 6-7 minutes in here, but they literally stopped on a dime at 2153 over here. And again, activity continues to kind of pick up at that particular level. So, well, where do we go from here? Again, when you want to look at this and try to be as objective as you possibly can at looking at, different levels and time frames over here, we're going to zoom back out to that 30-day, 1 hour, and most appropriately to the upside. Now, if you're looking for upside potential in the marketplace, well, great. So upside, first target we're looking at is right in the neighborhood of 2171. To the downside, once again, we'd be looking at 2129. Now, overall, I'm going to glance in the markets. There isn't a great directional feel right now. I know everybody's got specific levels they're looking at. I'm trying to give you targets both to the upside and the downside. And I'm going to give you a trade here in just a moment. Nevertheless, to look out just a few days, we have quite a bit of news and information due out throughout the rest of this week, okay? A couple of different, FOMC speakers coming out. Yes, the Fed. They never hesitate to amuse us, but again, there's a couple of different Fed regional, conferences going on that they're going to be speaking at. Nevertheless, that's going to create a little bit of chaos. There's also some big numbers coming out throughout the course of this week. So rather than try to perceive either bullish or bearish, the best read you're going to get right now is looking specifically to the SPX and trying to get a feel for what the expected moves happen to be. So one thing I want to remind everybody, and it presents it perfectly here in the September 30th, okay? September 30th, that is the Friday's expiration. It also happens to be quarterly expiration. So if you're looking for directional bias, recognize that markets do have tendency, right, on a percentage basis to rally into the end of the quarter. Well, couldn't be any easier than this. The end of the quarter is this Friday. So you might want to be thinking about the upside target of it that we just gave you inside of the S&P futures, which happens to be just around 2170, 2171 kind of neighborhood. With that, here's the irony of it. Take a look at the expected move. You're looking at about a $21 expected move between now and Friday. And again, those expected moves have been incredibly resilient and really proficient at kind of nailing market moves as of late. So two things I've talked a lot about is we're not trading, okay, in a definitive direction right now. It may feel like the markets are grinding higher every single day, but frankly, we'll go look at the SPX over here. We've actually been in chop trade. So when you're in chop trade like this, that's when, again, you start to look, and I'll go back to the S&P futures because that's where I've got the levels drawn on. But when you start to get into this chopped out trade, levels become a lot more important than overall directional bias. Because you can start to trade like, all right, so we can go up to 2170. If we do actually crest up into this neighborhood, we come back off a little bit. Again, for intraday trades, these levels are incredibly valid as of right now. Again, we're seeing this chopped out, really news-driven trade the last couple of days. So on a day-to-day basis, you have to actually step back. And it's okay to say this, to be like, hey, I don't know exactly where we're headed today, but at least I've got some levels to work off of. Now, let's get to really specific trade ideas because we're in a very heavily, again, news-driven environment. It's kind of what I call a catalyst, okay? And catalysts, they're everywhere in the market. If you looked over at a calendar this week, it's full of economic data. Again, it's full of what I call Fed speak out there. And these catalysts, every time there's a catalyst, which is, again, some type of event, it's just like throwing a match into a pool of gasoline, right? And eventually, again, we're going to hit a patch of some pretty substantial volatility. Now, with that, onward and upward over here, as you look down the list, one of the, I would say, was kind of an unusual suspect. I've been kind of digging through a number of scans over here. And when I start to scan, typically looking for contrarian style scans. And one thing that really surprised me is a scan that came up on EWJ. Now, we're going to go over here and we're going to pull up EWJ. If you're not familiar with it, it's the ETF for Japan. Okay. Now, let me close up this left side bar over here. The EWJ, the ETF for Japan. If you haven't looked at a chart of it, okay. So it doesn't trade in a wildly large range. So again, it's an ETF to try to mimic some of the large caps over in Japan. Remember something about Japan, okay? And that is the Japanese Bank of Japan, is going out and they're physically buying ETFs in the Japanese marketplace, supporting it. Nevertheless, they mentioned this once again at their version of their Fed meeting last week. Well, the market's kind of gripped hold, really sparked to the upside, some fairly chopped out trade, but I see a pretty good opportunity here to take a short position. Am I shorting against the Bank of Japan? Absolutely! Not really a short against the Bank of Japan. Nevertheless, it's the fact that the market got maybe a little overzealous on this move to the upside. Again, on a percentage move, you don't see too many moves on the screen inside of a week's time that on a percentage basis move this much. Now, trading EWJ, you're thinking to yourself, how exciting is this thing going to be, right? It's a $12 product. Well, it's all about allocation. So I started looking into the option chains, and after it came up in my scan, I'm like, oh no. I mean, this thing's got there's no open interest. Look. Don, come on, there's one contract in there. Oh, that is not all. Take a look into October, and it's almost awe-inspiring of how large some of the liquidity is in this product. So something clearly is going on. There's 81,000 contracts that are, opened right now on the 12 strike. If you've ever believed in ultimately an underlying being drawn to a specific strike, well, let's take a look at, again, EWJ 24 days from now and see if it migrates back down to the 12 level. Now, I wasn't willing to necessarily take a shot on that, but what I'm saying is that based on how overzealous the move has been to the upside after the Bank of Japan meeting, in conjunction with the fact that there's some extreme open interest here at a particular strike. Now, again, I kind of take that with a grain of salt. So I started looking through the various contracts. I looked at November. November here has 50,000 contracts, okay, that have traded at the 12 strike. And I started my pursuit a little bit more, and that's when, again, fairly eye-opening, 96,000 contracts, and a much easier way, rather than have to open up these physical, expirations in here. It seems kind of obscure to do that. There's actually a tool built into thinkorswim to do this. It's called the product depth. And all you're looking at right now, if you've never played around with this tool over here, well, fantastic. I'm showing you something kind of cool on thinkorswim. But anyway, this has been there, by the way, since like day one pretty much on thinkorswim. This is EWJ call open interest, EWJ put open interest. And if you look at the call open interest, the highest open interest on any individual strike is about 50,000 contracts. On the put, hello! I mean, you're in the 100,000 contract kind of realm. So the put open interest out there is nothing less than monumental. Okay. The bottom line, though, is it doesn't matter that there's over twice as many puts as traded that have calls. It doesn't per se mean we're going down, because traders, they could have been buying puts thinking we're going down, or they could have been buying puts as a what? As a hedge, hoping we never ever go down. But again, with the amount of put open interest out there in conjunction, and the sheer respect to the fact that the chart, again, got a little bit overzealous here, exploded to the upside, I'm going to look to enter into a short position in EWJ. How am I going to do it? Well, I've got some capital, so I'm going to go out there, and it is easy to borrow. I'm just going to short the stock. That's easy enough for me. I'm just going to go out there and short the stock. If you don't have the capital to do so, what I kind of suggest you might want to do is open up an option like a 52-day option. Give yourself a little bit of time, because this is not going to be like an overnight, banging out investment out there. It's going to take a little bit of time for this thing to mature. Just go in, right, and look at something like about a 90 plus delta. So go into like the NOVs and just buy an in-the-money put. So buy a put in the money. Why? Because it has intrinsic value. So you just want to go after all intrinsic value over there. I think buying these 12 strike puts for like 11 cents, that'll all be well and good. The problem is, for 11 cents, this market's really going to have to tank inside of EWJ to make it worth your while. Nevertheless, I don't want to buy any time value, so I'm going out there and I'm using in the money put. Work your order, work your order, work your order. The bid offer spreads in here, this is in the after hours, still 13 cents wide. Carve up that bid offer spreads, give the market makers absolutely nothing out there. And again, I'm going to short the product outright, and looking for a decent sized down move. Now, this is not a position that, again, we're going to have a day or two. Market got a little bit overzealous. It may take a few weeks, okay, even a month, 6 weeks out there for this to ultimately play out. But make no two ways about it. The quantitative easing inside of Japan over there, come on, they're going to get barbecued eventually. So let's be in the right position when that occurs. With that, again, I want to thank everybody for joining us here at TheoTrade. Join us throughout the course of the week in the TheoTrade chat room. Have a great night. Bye-bye.